How's it going? I'm Andrew with Investors Hub, and this is our How to Read a Stock Chart video. And it's suitable for all trading audiences, so beginners, intermediates, and veterans. And we're going to be talking to Jea Yu. He's been on the show a bunch of times. He's been a day trader for 20 years. He's got tons and tons of experience. And he's going to be walking us through step by step how he sets his charts up and how he makes the decisions he makes in order to make his money. Well, this isn't strictly sponsored content, no money exchanged hands. He did ask as a part of doing this video that we would promote the fact that he does sell services for teaching people how to trade stocks and how to analyze stock charts and go more in depth on his thoughts. So there's a link down below to where you can find that information. There's also a promo code that'll be shown during the video where you can get 20% off. So, yeah, after this quick disclaimer, we'll hear from Jay. Please note that our videos are not designed to be direct investing advice. Our channel and our content should just be one stop on the journey of trying to find out where to put your money.
Basically, you got to understand that there's fundamental analysis where you take into account, the day-to-day operations of the business, anything that's material, any SEC filings, 8Ks, any press releases that come out, anything that has to do with the operations of the company is fundamental analysis. And then when you look at charts, it's called technical analysis. And with the charts, you got so many different ways of reading the charts. Myself, it took me over 20 painstaking years to come up with what I call, the rifle chart. The rifle chart is basically, for me, it's the most basic tool in my arsenal when it comes to looking at stocks. So in short, a rifle chart is based on two parts. All right, so we'll just go ahead and take a look right here. This is the DIA, Dow Jones ETF. All right, and so we have two parts to a rifle chart. You have the price portion, which is kind of like the roadmap. Then you have the momentum indicator, which I use a stochastic, which is like the engine. Right. So, a lot of guys that use technical analysis and they only look at just the price chart. To me, that's very foreign because it doesn't see what I've learned is it doesn't matter a particular price. It's how it gets to that price. If it gets to that price very fast, then there's a lot of meat between the bones for a reversion. So oftentimes I'll play the opposite. I'll play the I'll trim the fat and play the reversion pullback. Even if it's an uptrend, I'll play it short. Even if it's a downtrend, I'll play it long just because there's, so much of an overshoot. And then the momentum indicator tells me that it's oversold and it's ready to pop back. So the rifle chart, as I said, it's composed of two portions. The price chart is composed of a 5-period simple moving average and a 15-period simple moving average. I also add the Bollinger Bands. All right, and the Bollinger Bands do two things. They give you what the nominal range is. All right, the nominal extent of the range, and then you'll notice that the Bollinger Bands will contract and then expand, contract and then expand, like an EKG. All right, so usually when there's a consolidation in progress, the Bollinger Bands will contract, and then when the price range is expected, it precedes a compression or a contraction precedes expansion, which means that the price range is going to expand. So with the DIA, which is the Dow Jones, which is down about 530 points today, all right, on this hourly chart, 60-minute chart, you'll notice, the downtrend happens when you have lower lows and lower highs. And, when I first got into trading and people used to tell me these stupid cliches, the trend is your friend. Let your profits ride, take your losses early, whatever, stuff like that. That's such rear view mirror talk. All right. The reality is you don't know the difference between a wiggle and a reversal, until you give it enough time. And then once you give it enough time, usually it's too late anyway. And then most people just hang on for dear life, and pray. All right. That's the other part of trading, prayer part. Now, if you find yourself praying, that's when you've gotten yourself in a quandary. So first and foremost, going back to what I said, the rifle chart is composed of an upper, lower Bollinger Band, all right, a 5-period moving average, which is going to be your lead moving average. It's going to be your support. Whether it's an uptrend or a downtrend, it's your downtrend support or your uptrend support, and then your 15-period moving average. And then on the second part of the chart is your momentum indicator, all right, kind of like the your engine. And I use a stochastic, all right. Now, every charting platform kind of has a different stochastic setting. I use a percentage D slow. 1535 is the setting on TradingView. Some charting platforms only ask for two inputs. So if you only have two, use a 15.3 or a 15.5. All right. And then as far as the price chart is concerned, instead of the standard 2.0 standard deviations, I use a 2.618 standard deviation. And that really applies, especially in this market, which is, algorithmic. And the algorithms love to overshoot in one way or the other. So 2.618 works real good. So anyway, that's your basic rifle chart. Now, I haven't included the fibs because that's a whole nother can of worms. And I'll show you on my other charts. Once you add the fibs, what that does is that kind of gives you almost, I wouldn't say so much a predictive reading, but more so it's added to the price chart, kind of like, all right, so we have fibs here, okay. It kind of sets it up so that you know what to expect. You know at what point a fib plays a part, and it's, getting to a point where you get a reversion. Right. So what I call the 4 lines, upper lower Bollinger Bands, 5-15 period moving averages. All right. On the price portion of the chart, I call them bumpers, like on a pinball game. All right. Bumpers. So when the price hits a certain bumper, you'll get a reaction. If it hits the lower Bollinger Band, you will get a reaction right back to the next bumper. Remember, there's 4 levels of bumpers: upper, lower Bollinger Band, 5-15 period moving average, and then a lower Bollinger Band. When we hit a lower Bollinger Band, that's a bumper, and oftentimes you hit that, and then you almost get like a knee-jerk reaction spike right back to that 5-period moving average. Now, this is where it gets a little complicated. This is your basic rifle chart, but understand that a stock can be in an uptrend, simultaneously be in a downtrend at the same time. And that's because the wider time frame can be an uptrend, but the smaller time frames can be a downtrend. So as you're watching your portfolio or your stocks and they're collapsing like crazy, you're convinced that you're ready to throw in the towel, you're losing too much money, right? But meanwhile, when you utilize the wider time frames, you realize that it is just, it is just downtrending in the smaller time frame until it gets to a bumper on the wider time frame. So to give you an example, right? So the Dow Jones are down about 530 points today. The 60-minute time frame is what's known as an inverse pump. When the stochastic gets under the 20 band, it's oversold. When it gets above the 80 band, it's overbought. So if we look at the Dow Jones, we realize, holy cow, we are under the lower Bollinger Bands on the daily. So we're oversold to begin with. 60-minute charts tell us that, all right, we have what's known as an inverse pump breakdown. It can fall even lower down to near that 330 area. Okay, so this is a downtrend. But keep in mind that if we go to the monthly charts, we realize something. We realize that the monthly is still in an uptrend. All right, stochastic. Now this thing is nearly at the 100 band, but the stochastic is still up. So what we realize is 331.43 on the DIA, okay, which is the monthly 5-period moving average. That is a monthly bumper. So if we hit that 331.43 area, that is a good spot where we will bounce. So what I can do right here is just put in a little line right there. And this is what I normally do, right? And so if the Dow Jones, say come Monday, the DIA drops and hits that 331.40 area, I know right there that is a monthly 5-period moving average. That is a bumper. And just like on a pinball machine, when it hits a bumper, what does it do? right? It reacts. It reacts. Boom. Now, when I see that we're under the daily lower Bollinger Band, see the nominal downside is this daily lower Bollinger Band, which is 335.31. Okay, so the nominal bounce area is back to the lower Bollinger Bands, which is all the way up here around 335.31 area. All right, so now, when I put the pieces together, the pieces of the puzzle together, today was extreme. All right, when you get under a Bollinger Band, daily, weekly, monthly, all right, it starts to get extreme. So I know the nominal reversion is back to that 335.28. But I also know we hit that 331.44, right? That's the monthly 5. The monthly is what I call the dragon. And this is a sleeping dragon because usually the monthly charts, monthly bumpers don't come into play. But when they actually do come into play, you have to really pay attention. So come Monday, I'm watching this 331.40, 40 area. If it tags that, I'm going to jump in on stocks that follow the Dow. Okay. Now, keep in mind, the Dow Jones is only 30 stocks, and S&P 500 tends to follow the Dow Jones. So you got to ask yourself, all right, Jay, well, what correlates with the Dow? What sold off hard today? Because the NASDAQ actually still held its daily 5. Now, let me show you something. Since we know, all right, there are 3 major benchmark indexes, right? We have the Dow, we have the S&P 500, and you can use, the ETFs for that. So here's the SPY. Now, SPY sold off today as well. Notice where the 5 period and the 15 period is in relation, to where the price is. Stochastic slipped the 80 band, so it's overbought. And then once it breaks the 80 band, it's like entering the Earth's atmosphere. And the gravity kicks in. Boom. Now, the lower Bollinger Bands on the SPY, right, sit right here, around 413.42. All right. So Monday, if the SPY falls down below 413.42, I'm looking for a bounce. I also have what's known as a fib, all right, a Fibonacci level, retracement or extension. All right, so the fibs, if it gets down to 412.82, it's a no-brainer buy. Now, what I like to do is like to look at these wider time frames, okay, and kind of just measure. Now, notice on the Dow, right, DIA. Notice how we are closing in on the monthly 5. We are below the daily lower Bollinger Bands, which means we're extremely oversold, and you see a drop through the 20 band. That's oversold. We look at the SPY, and it's a little more muted. SPY is definitely breaking down, but we still have room to the lower Bollinger Bands. All right, we have a lot of room on the SPY back to the monthly 5. In fact, 405.59 is where the SPY monthly 5 is. All right, now we look at the QQQs, which is the tech stocks. Now notice on the Qs, wow, are we anywhere near the daily lower Bollinger Bands? Daily lower Bollinger Bands are down around 323. We're trading at 342. All right, so we have a long ways to go to hit that daily lower Bollinger Band. As far as the weekly is concerned, you'll notice that this weekly stochastic crossed up, okay? And this is what's known as a pup breakout. We're above the weekly 5. Now, the hourly has come down, okay? It's nearing the 20 band, and it's going to overshoot. But so far, we have defended the 5 period, and we've definitely defended the 15 period. All right, so come Monday, I'm going to be watching this 15 period, which is around 338.22, plus we have a fib around 337.94. So right around this area is where I expect, just like in pinball, right? If we sell off, we're going to bounce right off this low, this area. Boom, we're going to bounce right off here. As far as the monthly is concerned, 5 period moving average, 329.56. So it's almost like a game of concentration, and you have to look at the levels. Now, there was a time where the Dow, the S&P, and the NASDAQ, they all moved together, right? But if you look at the indices today, the Dow's down 530 points, all right? The NASDAQ is barely down. The S&P's down 55, NASDAQ, all right, NASDAQ's down 130, okay? But you'll notice, a lot of stocks were actually holding up pretty well today. PayPal had some news. Look how strong PayPal is. all right, near the upper Bollinger Band. You had Snap, right, bouncing, Oracle, and that's because Biden, well, not so much Oracle, Twitter, right, Facebook. Well, Facebook's a little lower. So this is where the market gets a little difficult because you have a lot of stocks that move together, but their daily, their rifle charts are a little off. There's not as much convergence. Now, I will tell you that there's a group of stocks that have sold off very hard, and that is the commodities. That is the metal stocks. Okay, copper sold off, gold sold off, X, U.S. Steel. Okay, look how hard this sucker has sold off. All right. Boom, 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 boom. 1, 2, 3, 4, 5, 6 lower lows on the daily. And it's nearing the lower Bollinger Bands on the daily. All right. So U.S. Steel is one of the stocks. And full disclosure, I'm long U.S. Steel. I'm long a lot of shares U.S. Steel, actually. All right. And that is because here's a funny thing. They came out with the earnings. They raised their guidance last night. So here's a company that hasn't made money in years, and now steel prices went through the roof. Lumber prices went through the roof, but steel prices, they have gone through the roof. Home building, construction, infrastructure, et cetera, et cetera. So last quarter they did $1 and change EPS. They came out with earnings. They raised their Q2 guidance. They raised their guidance to $3.08. Above $2.67 consensus IQ estimates. They also paid down more of their debt. Okay, so you have a stock that's now trading at 2.5 PE. All right, yet the market sold it off today because you have a rising dollar. Right, rising dollar is going to hurt commodities, but the paradox is that commodities are an inflation hedge as well. Okay. Nonetheless, you have U.S. Steel. This thing could hit daily lower Bollinger Bands down around 2186, and that's it. Overlaps with a fib. If it hits that area on Monday, I would back the truck up, load up. All right. Here's a company that's come out and they said 2022 demand is strong. It's going to carry on straight into 2022. Raise their guidance. So how many companies come out and raise their guidance and they still sell off, right? And that's what happened with X. So I even said on my Twitter feed, load it up on X. If it falls lower, I'm going to buy more, all right? Now, it hit that monthly 5 today. Weekly's peaked out and slipped. But here's what I love. When you get a lean down to the lower Bollinger Bands, okay, you're going to get a snapback back up to the 5-period moving average. Daily stochastic is still coming down, so it may sell off for the next 2 days till it hits that 20 band, and then bottoms out and comes back up. DIA, it's already oversold. This thing gets down to 331. You want to start buying the DIA or Dow Jones stocks. The most expensive stocks are the QQQs, the tech stocks, right? They're still far from falling down. Commodity stocks, however, have sold off huge. All right, copper sold off. I mean, look at Cleveland Cliffs. That thing still has more room to the downside. But I will say, when it comes to steel stocks, all right, you have your Nucor. Look at this thing. This thing gets down to, good Lord, 9182. You want to be buying. You have your STLD, Steel Dynamics. Okay, look how close this thing is to a daily lower Bollinger Band right here. 57.38. You want to start buying. You have your X, which now I love X, all right, but I will tell you that there is still more downside. Down to 2186. This sucker gets down. I'm going to set my alert down there. This thing gets down to 2186. You need to start buying. Okay, there's room to 25. So there's a good 4 points there. All right, that's how you get in. It's basically playing like the smart money. When people start to panic, they get margin calls and they flip and they sell. They're so glad to get out 22. It drops to 2186. They're patting themselves on the back, right? I got out, yeah, I was in from 27, but Guess what? I got out of 22. It's going down to 28, 21.89, and you feel good about yourself. Next 3 days, thing bounces back to 25. Now, what are you going to do? And you know what the fibs tell you is that, well, once it gets back above 25, 26, you're going to start buying again, right? And you're going to buy little by little. And then when it gets to 27s, you're going to get FOMO, you're going to chase it. And what's going to happen? It peaks out and sells off again. Okay. That's what happens. That's what happens to the little guy in the markets. So, when it comes to trading, basically you have to, I tell you, trading, you're either bored to death because you're waiting and it's never getting back to you, and you want to avoid the FOMO, right? Or you're in sheer terror, okay? Because you start scaling in because you thought you were smart, and there's a whole lot more to downside to go. And you got to make sure you have enough bullets in the chamber, right? When it comes to trading, when it comes to money management, actually, it's like that movie Rounders. You always want to make sure you have buying power. Okay, you can't lose what you put in the pot, number one, but your bankroll is the most important thing. All right, it's better to have a gun and not need it, which is your buying power, than to need it and not have it, which means you over levered and you got margin called. All right, remember that. So good trading basically means you're bored a lot. You're bored a lot. You're frustrated a lot. You're frustrated because your limit orders didn't get hit. All right. You're disciplined enough only to get in when it's buy, when it's very oversold, short when it's very overbought. The rifle charts, it's going to show you, it's going to tell you whether you were lucky or you were good. All right. Were you lucky? And you bought the long and it went up to 20, bought the long at 23 and it went up to 25.10. Okay. Were you lucky or were you good? Well, if you sold or trimmed it down, around that 5-period moving average bumper, you were good. If you held on to it, hoping for more, and then it tanks to 21.86, well, you were lucky. And luck is fleeting when it comes to the markets. All right. And you know what? Time always discloses transparency. So you can also wait 2 or 3 days and then your profits turn into losses and you realize, oh shit, I was lucky. Right? I wasn't really that good, because if I was good, I would have gotten out. So the rifle charts, they illustrate, they visualize whether you're lucky or good. They visualize what the trends are and what the bumpers are. And then, the whole science, so the art is playing within the time frames and utilizing the Doppler effect and correlation. If anyone wants to get more in depth about the rifle charts and the methods, you have the link, Andrew.